I run into a little bit of issues, so be patient with us, please. We got a producer working real hard, so I appreciate that. Andrew, what's happening? How you doing?
I'm doing well. Sorry, we wanted to go a little bit earlier,
Yeah.
but I was at the doctor appointment. Crazy day at the markets.
Yeah, absolutely.
Everything is melting. Ali, what's going on? You tell me. You are the macroeconomist here.
The macroeconomist, yeah, it's definitely been tough. So let me go to our trading terminal really quickly. As you can see, a pure massacre. So let me actually show you. All day sell over here on SPY, all day sell on NASDAQ. The selling is continuing. We had some heavy hitter, Microsoft and Google doing earnings, so we're going to talk about that as well. Dow, the same story. Bitcoin, store of value, Andrew, your favorite, going down tremendously. Things are, I mean, in terms of macro, we're seeing a solid risk-off move. You're seeing for the first time yields are coming down, so bonds are rallying. We talked about it. It's been at least 2 weeks that I talked about bonds at some point are going to rally, and people are like putting their money into treasury. So a solid risk-off kind of day.
Yeah, so that's complete risk-off. Apple down 5%. Facebook is down 7%. Tesla was one of the biggest losers. Ali, maybe you can click the update available. Maybe you can remove that onto your screen. The people can see the sector performance.
Oh yeah.
So
absolutely.
Tesla was down 13%, and that's one of the biggest losers of today in the technology sector. It's taking the whole market down from $1,000 right at the open, which was actually green. Now it's closed at the low of the day, $867. So it lost $1,000. Like $40 in a day.
$120 billion in market cap.
Wiped out.
Wiped
like
out.
3 Twitters just wiped out.
Wiped out. Yeah, it's pretty insane. We're gonna spend quite a bit of time actually talking about why do we think it's happening. Maybe it has something to do with the Twitter deal. It's definitely going to be interesting. But just to stay on an overall theme of the market on U.S. global and market indices, I want to kind of hone down the concepts here. You're seeing 10-year treasury going down. That means bonds are rallying. So that's a risk-off situation. You're seeing 24% uptick in VIX, which is implied volatility of S&P 500. That's definitely a risk-off. You're seeing a skew going towards that 100. We've talked about a skew, being a lot of at-the-money puts being bought out, getting closer to 100. That's also a risk-off mode. So things overall not looking good. Over here on our commodities, same story. You're seeing gold, which is a safe haven asset, going up 52 basis point, and lumber, which is the housing market, crashing. So not looking so great.
So lumber is down. That means that is it impacting the real? Yeah, lumber is down like not a lot though. It's only 1% down.
Yeah. Lumber only 1% down today, but I would look at the past 3-4 months. It's been absolutely brutal for lumber. It was at some point 1,800, so it has almost like it got cut in half. So pretty brutal for lumber. And we know houses are built from lumber, and so that's kind of a leading indicator of economic slowdown.
That's exactly what happened in 2016 and 18 as well. So they're leading indicators. So people don't do as much as construction. Everyone is going into the conservation mode, and therefore the demand for lumber is going to go down.
Yeah.
What about the oil? Oil did held up well, yes?
Yeah, I think there's still conflict going on, as you can see in our commodity page in our tradingterminal.com. Oil above 100, it's holding that 100. I wouldn't like oil at $200. Really, it's not out of the question. It's not a crazy thing to think about. Another thing I wanted to say about like the market conditions is everything we do as traders is based on probability, and trading the market is like driving. So when it's rainy and the weather condition is really bad, that doesn't mean necessarily you're going to crash. That means the probability of crash is going higher. So when we're looking at VIX, when we're looking at a skew, it doesn't mean the market is going to crash. For what we know, we might rally tomorrow. It just means the probability of the crash is higher. That's what we're dealing with here, is probabilities, basically.
It's all probability, obviously. Then
it's all fugazi.
It's all the fugazi. Nobody really knows exactly what he's doing. I mean, a lot of people are trying to find the exact answer. Nobody knows. Market, what we know is always forward-looking. You can be in the middle of a recession, but the market is rallying because everyone is thinking about the future. That the recession is going to be over and the economy is going to expanding again. But right now, as of now, there's a lot of uncertainty. The war in Ukraine is continuing. The China chaotic lockdown. These port jams and shipping issues right now in China. There are pictures that I see is crazy. All of these big containers are trying to load and unload. This supply chain disruption is gonna hit in the summer toward the end of the year. Right now, everything stocks people have it, but eventually catch up with the Western economies. And obviously, interest rates are increasing. Yeah. The money is becoming more tight, and the cost of borrowing is gonna go higher than that. Can Fed do anything to stop that? Can they, make a decision much faster? Because I know Jim Cramer was saying that just make your decision, otherwise you're gonna really, the layoffs are gonna start, and companies will have to start letting people go.
I think what I like to do is personally look at the market and what the market is telling us. Yields are going down. So basically what this means is that the bond market is telling us, hey, the Fed is not gonna be as aggressive as we think it is going to be. The bond sold off, has been overdone, it's time for a rally. So that's what the smart money is telling us with bonds. The 10-year was almost at 3%.
3%,
so
yeah.
Now it's at 2.7. The people I'm following are saying 2.2, 2.3 is not out of the picture. So 10-year really coming down, that means bonds really rallying. That's basically a way of market telling the Fed, you're gonna calm down, you cannot rate this aggressively with all these headwinds that we have. And if you're thinking about demand destruction, I think the demand is absolutely destructive. Let me bring the year-to-date performance. I mean, when your 401k is down 25%, there's not much buying happening anymore, right?
Yeah, that's exactly. I mean, however, in Bloomberg this morning, I was reading that still the airlines are seeing the demand for travel. American Express reported that, and they said that the credit, people are still spending. There's no problem with that. And some consumer discretionaries, like I think PG, Procter & Gamble, they reported that, and they're still, even the luxury brands were still going. So it means that this inflation and the deflation and the money hasn't really catch up with the consumers yet. The market is probably overreacting right now.
You tweeted about that, right? Let me bring
I
up
did tweet that,
your tweet. Let me see. Let me bring it up because I think that was interesting. Procter & Gamble is kind of a staple, so I wonder if their thing is a little biased. Let me see.
It's just early in the morning. I couldn't sleep. That's why I just
Oh yeah, there we go. So let me bring this up a little bit, make it a little bigger so all of our viewers can actually see what Andrew is talking about. Earning tells us a lot about state of economy, P&G, which counts Tide, Bouncy. So these are all like staple, but some of them are premium product. Credit company, American Express, Leoral, which is definitely less of a staple. Consumer purchasing behavior unaffected. So economy is strong.
And from 75% of the S&P 500 yet, those ones who reported that they saw 7% increase in the they beat the estimates by 7%. So that means that they are still expecting a growth. Yeah. Is Wall Street overreacting to put the pressure on the Fed? Do you think that? Do you think it's a coordinated reaction with Wall Street, or it's just market cannot be that coordinated?
It's hard to say it can be coordinated. I don't know if like a sovereign fund in Saudi Arabia is really coordinating with.
So it's a mass psychology that everyone panics at the same time. Everyone goes into the risk-off mode at the same time.
Yeah.
So it's more, it's like anything else is all mass psychology on Wall Street.
Yeah, mass psychology is really amazing. So when you compare, I read an article recently. When you compare the dot-com bubble, like how that looked like, and you compare it with what's happening to Cathie Wood's fund, it's almost identical. Like the rise, the fall. And it's all basically the mass psychology theory.
The FOMO that they're getting, and they're chasing the stocks and high values.
Let me see if I can bring that up, because I think that was interesting as well. People will get a little bit of value out of it, if I can find it.
So semiconductors, until you're really looking into that, semiconductor sector is a sector that is really got beaten up, and it's amazing that how NVIDIA and AMD are really getting beaten up. And they are trading like at 15, 16 PE, and they're really, really beaten up. I mean, compared
cheap.
to Tesla that is trading at the 100 multiple of their earnings.
Yeah, they're getting really cheap. I say to people, if you have a 10-year time horizon, probably the best trade of next decade would be SOXL, which is semis. They're going to be used in everything over the next 10 years and use a little bit of leverage. It's going to be the best one. This was the wave theory that I was talking about. So you can see this is the NASDAQ bubble, 1996 to 2012. Hopefully everyone can see my screen. You know, going up 5 times, going down, going up again, a little bit of hope. No, all hope is lost, finding the bottom, and then rallying. Exactly the same thing happened to Bitcoin from 2017 to 2020.
Wow.
Going up, right? Like the charts are almost identical. It's like human psychology is uncanny, right? It's unbelievable. Same story happening to Bitcoin, going a little lower. This is what's happening to ARK. So it would be interesting if ARK can actually take it off and rally or not.
Yeah, that's very amazing. Which newsletter is that? Is that your newsletter?
No. This is one of the things that I read over the weekend. 50 trades in 50 weeks. Yeah.
Yeah, that's excellent because Ardi has a newsletter that he's summarizing all of this stuff. So if anyone is interested, you can definitely go to our website and sign up to Ardi's newsletter, and or Peak Capital Trading. If you go there, you know there's a research page that Ardi is putting all of this stuff. You can find all of those in there.
Yeah. I mean, another thing, Andrew, in terms of before we move on to the next topics, look at the VIX term structure, where we've talked about how the correct term structure. Let me draw it up over here. Is the longer you go in volatility, the higher the volatility is going to be. So you want something like this. Now we're in backwardation, so it means short-term volatility is higher than long-term. When this happens, this is unsustainable. Volatility term structure cannot stay in this format for a really long time. So that usually signals within about a week or so, we should be able to see some kind of a relief rally. Because this is, just because of volatility itself, this cannot sustain for a long period of time, stay in the backwardation. I think the most we had it was a few months ago, about a month, but that was about it.
Yeah, market is definitely oversold at this stage, and definitely there's a relief. And you know, there's a lot of you see a lot of stocks that are really lost all of their post-pandemic gains, and they're trading below the pre-pandemic levels. But the businesses has grown, so they shouldn't be that trading that low. So there's definitely a lot of buying opportunities right now in the market. But if you got the cash and if you have the risk appetite for that.
Yeah, like look at Facebook, right? How much?
Yeah, the Facebook or Meta had the earning. I think when is the earning? I mean, it did drop a lot from 181 close to 173, so it dropped another 10 points. I don't know if was it, but I don't see a lot of volume right now.
Yeah, no, the earning is going to be on Thursday. Yeah, so it's I don't know why it dropped.
Maybe it was a sympathy trade. Google had earning as well.
Google had earning. It did drop a few percentage points. I'm still waiting for the result. I'm going to our trading terminal to the news page to see what was going on. Oh. And we're speaking of recession, look what just came up in the news page of our trading terminal. Robinhood cutting about 9% of full-time employees.
Oh my God.
There you go. So recession, we've talked about, market being forward-looking. This is definitely the definition of forward-looking.
A
big
lot
YouTube miss. So this is really interesting too, Andrew. Alphabet reports weak earnings and revenue on big YouTube miss. So it seems like advertisers are also cutting back. So that might be why Facebook has sold off, because their revenue is 100% advertising.
I personally, for Wearable Traders, stopped my YouTube ads. And I also reduced the Google ads because I realized that, first of all, obviously we are going into a slower economy. Plus, I wasn't really 100% sure that our ads are useful in YouTube. A lot of people are skipping them. A lot of them are using these pop-up blockers that they cut the ads. I'm kind of expecting that the YouTube ads are going to drop.
Yeah. It's definitely going to be interesting.
So another thing is that Ardi, you discussed, I don't know if you want to discuss it right now, about Elon Musk buying Twitter.
Yeah.
So when Elon Musk, bought the Twitter at 44 million, I mean, the deal hasn't gone through yet. You mentioned, you brought this into our attention that the interest payment for that purchase, which he obviously financed it through his holdings, is like $2 billion a year.
Yeah, something in that spectrum. So I don't want to take all the credit for that, but somebody posted this. This is a person I follow. He comes up with really interesting stuff. But think of it this way: he's financing out of that $43 billion valuation. He's financing $25 billion of that, and the rates that they get is not very cheap. So the rate that is secured is SOFR, which is secured overnight financing rate, plus 4.5 extra, so 4.5% extra. So if SOFR, which is very similar to the Fed's fund rate, go to 2.5%, it's going to be a 7% interest on 25 billion.
Wow,
that's a lot. Yeah, that is a lot of interest. So he's probably looking at spending $1 to $2 billion a year just on interest alone on this purchase. So that might be one of the reasons Tesla is selling off.
Oh yeah, that's why.
He's either making up some cash for the purchase. It could be at some point, if the banks lose their confidence, because this loan is backed by Tesla shares. If the banks lose their confidence that Tesla shares are not valuable, they could start liquidating. So that would be really interesting as well. How's the chat doing, Andrew?
The chat is good. People are asking about my position. I do still have the TNA position. It's hedged, but that one is more like a long term. I don't really need that. Another thing is that I know a lot of people probably might look at their 401k and savings. If you don't need the money for tomorrow, don't worry about it. This is a healthy correction of the markets. And, if it's not, it's a lot of trading opportunities, but for a lot of people who are in the long-term holds, just don't keep it. Equity market in the US has always been outperforming all asset class. But you just have to maybe wait a little bit until the markets calm down. There's a lot of uncertainty on that. But yeah, the TNA position, I actually have some TQQ and SOXL right now because I was trading in the afternoon and I had to leave the office.
Yeah.
And I a couple of thousand shares of each of them. So I'm going to see, I think we're going to get a pop at least in the pre-market tomorrow, and maybe I sell it and we'll see how it goes. But I do still have SOXL and TQQ.
Die by leverage, live by leverage.
Leverage it is, yeah.
Exactly. Yeah. No, it's I mean, of course, when like a guy in your magnitude, everyone's always interested on what you're holding,
Oh, thank you so much.
Like,
what I don't hold is the cryptocurrencies.
Yeah.
That they are dropping. The market, the stock market is dropping like this shit coins up and down. Now imagine you're having Dogecoin or other altcoins that there's no fundamentals behind it. These are solid companies that are generating revenues and they're dropping like 10%, 12, 13%. Like Tesla is a solid company.
Yeah, 100 billion wiped out.
Another reason that the Tesla might be selling off is maybe it's because of the exposure to China. And Tesla has this huge exposure to China in the production, in the market, and also in the lithium and some raw materials. And the chaotic situation in China has maybe caught up with them.
Yeah, definitely. I mean, the Tesla earning was a couple of days ago, and was it a couple of days ago or it was last week? I can't recall, but I know Elon Musk was on the call and he talked about he's even optimistic with all these supply chain crunches that they're going to exceed the 50% increase in production. So initially they were thinking about 1.5 million cars. Now he's kind of promising 1.6, maybe 1.7 million cars produced this year, which is really optimistic. I don't know if he can pull it off. Kudos to him if he can, but with factories being shut down, economy is slowing down, this would really be interesting.
But the President Xi, he supported the financial easing and support of the economy.
Yeah.
But there is issues that people do not believe that China cannot control this recession that they're getting. And another, this is about U.S. economy and Chinese economy. U.S. economy has proven in the past that they can come out of any recession.
Yeah.
But Chinese hasn't been done that. China, because it's such a closed economy and it's so controlled by Bank of China and the government, people don't know if they go into a recession, if they can actually come out of it without the whole economy collapsing. And maybe that's why the drop has been much more significant. And that's another thing that again, the companies with huge China exposure, they're not doing well at all. What's Baba doing right now? I would be wondering. Down 3% actually, it's not that bad.
Let me bring up Baba. Yeah, I mean, you looking at Baba's chart on a daily. This is a pure massacre, right?
Yeah.
Just imagine if you were shorting this, you would be a multi-millionaire.
Yeah, definitely. Now. I mean, that's the reason that Baba didn't sell off as much as like Apple is because Chinese government, really said that we're gonna really help, to put the economy back on track and save the stock market. But interesting time. It reminds me of pandemic time in 2020. This kind of drops. A lot of trading opportunities, but you have to make sure that you do not get stuck into the wrong side of the trade. And do not turn a day trade into a swing trade.
Yeah,
like this SOXL and TQQ that I have, if tomorrow, I'm not going to stay on them. I'm going to sell them and take the loss. So you don't really marry to any position at this stage.
Yeah. Andrew, speaking of China, there's one thing I thought it would be interesting to talk about. Jeff Bezos was awfully quiet when Elon Musk was buying Twitter. Everyone was congratulating Elon for the sales, and Bezos was awfully quiet, and this is what he basically said, replied to another thing. It says, interesting question, did the Chinese government just gain a little bit of leverage over the town square? And this is in response to a tweet that the person says, Tesla's second biggest market is in China, lots of battery.
You can draw on it, I think.
Oh yeah, absolutely.
If you can draw on that.
Yeah, no, I can definitely draw, yeah. So after 2009, China banned Twitter. The government there almost had no leverage over the platform. That may have just changed. So basically, this guy is saying, can Elon remain neutral? With the leverage and exposure that it has in China, and definitely that's what Jeff Bezos is kind of alluding into that, right?
That's amazing. That's really interesting. So I see almost 100 people are watching. We thank you and I appreciate the thumbs up if possible, guys. And if you have any question, just put it in the chat room. I know Carlos and John are there, Jared are there, and we're gonna happy to answer any questions. One thing that you should check is tradingterminal.com.
Yeah.
And there's a news tab and there's the information that Ardi is talking about in tab. And if you have any question, you can always leave it in the comments or just email us, andrew@bearbletraders.com or ardi@bearbletraders.com.
Yeah, exactly. Just going into the calendar of our trading terminal. So Facebook, Microsoft, Google, Visa, these guys all reported. I'm going to spend the next 6-7 hours reading through their filings, see what I can find. Visa is going to be really interesting. How is the consumer spending? Are they seeing slowdown? And then, of course, tomorrow is going to be a really interesting day. Facebook, PayPal. This would be, especially PayPal, I'm really looking forward, as a payment processing platform.
Yeah.
The economy is slowing down.
It's going down. The PayPal has been on a very, very big downtrend, like a Square or Block, which also into the payment processing, that has been in a huge downtrend from the highs of 300. Now it's trading at $98.
Yeah.
And, Jack Dorsey is definitely under pressure. That would be really interesting to know. However, it might be a little bit of unfair to evaluate these companies based on this market condition. There's a lot of these sell-offs are correlated, and there might be nothing wrong with AMD and Nvidia. It's just the whole sector is weakness, and the money is flowing out of equities and going to the bonds or treasuries that are almost risk-free and have a better return probably for this year.
Yeah, and a lot of these names are high beta, right? Like the beta is basically the kind of the correlation, the covariance of that security with the market. So like, let's say a stock like Tesla beta of probably 1.4, that means it's 40% more likely to move when the market is dropping. So on a day that market drops by 3%, you can expect Tesla to drop probably by 5%, 6%. So that's just the way the math would work. Let me see what is Tesla's beta. So it's probably really high. Yeah, a beta of 2. So you can imagine on a day that market like this drop like 3%, 4%,
100%,
it is reasonable for Tesla to drop 8%, right?
Yeah.
So really.
Yeah, the whole market, the QQQ, the drop in QQQ was almost 4%. I think 5%. Ooh,
Yeah.
5%. QQQ is 5% because after, including the after hours QQQ, the SPY is 3.5%. That is, I don't remember Qs are dropping 5% in a day. Is that the worst sell-off since pandemic? I do not remember QQQ down 5% in a day.
I was just reading an article this morning. Let me see if it mentioned anything. In terms of a drawdown, we're getting, for everyone, hopefully they can see my screen. In terms of drawdown right now, we're getting really close to the March of 2020. I mean, look at these parallels is quite uncanny. So definitely a huge drawdown. Tech is not a place where you want to be.
Wow. Wow, amazing.
Yeah. Any questions, Andrew, we should answer? Anyone asking anything?
No, I don't. So should I buy the dip? Cesar is asking. Should people start buying the dip or no?
Yeah, it depends on what dip, right?
Well, we started buying dips since January, and it just keeps dipping. I think market is definitely getting into, as you mentioned, the inversion of the wicks.
The backward ratio.
That is a backward ratio of the wicks is potentially could be a sign of a reversal. Nobody knows exactly when. Is it tomorrow or is it 2 days? There's a lot of news that can change the market. If the peace comes in, Europe, it's gonna have a huge effect. If the lockdowns and the COVID situation in China becomes under control, that can have a huge impact. And if the Feds are saying anything about the monetary policy and interest rate, it can impact that. Can it go lower? Of course, the market can always go lower. And should I buy the dip also goes into your risk management and trading strategy. That if you want to buy the dip to sit on that, that's a very different story. If to buy it tomorrow and sell it the next day, nobody knows that answer.
If you're dollar cost averaging, then you might want to take advantage of it, 20% down, but it all depends on your time frame and
time frame as well.
Yeah.
Or you can just start scaling in slowly with like 10% or 20% position, take 20% on the positions. But I personally has always been love sectors and indexes. The Alibaba can go to zero, but SPY cannot. That's definitely something that you should always remember, that for a longer term hold, and sometimes you find a good deal on one certain company, but on the longer term it's better to diversify through indexes.
So in terms of valuation, I'm looking at QQQ, and this is quite interesting. So price to sell of 6.4 now on the whole Qs, which is pretty. It could be a little expensive, but not so much. It's definitely getting reasonable. And price to cash flow. So if you look at it, if you consider cash flow as free cash flow, meaning like probably EBITDA, 16 multiple is not too crazy. So a 12 to anywhere from 12 to 18 multiple for a technology company is reasonable. So I think in terms of valuation, at $317, Qs are looking interesting. You could wait this week, see how Apple would do, see how Amazon would do, and then start building position into Qs. I think that's reasonable. But looking at fundamentals, valuations, it's not bad. It's looking decent.
Yeah. So the question is, what strategies are working from our book? For day trading, really depends on the day. Like today at the open, I haven't done the recap yet. Today at the open, I didn't see any momentum trade. Market slowly started selling off, and the only thing that I traded was reversals. I did a bunch of reversals trade.
Yeah.
So what you should do, I think, is look at the market open and see how it's. If you gap up and start ripping, there's always opening range break up. But if you continue selling off, you can either short to the downside, or you can try to catch the reversal according to the trade book and strategies. And how to build a trade book, you have to experience it over months to build that trade book. That's something that in Peak Capital Trading Bootcamp that we start in 2 weeks, we're going to help traders to build a trade book and stick to a trade book.
Yeah, exactly. And if you're an option trader, this is the kind of market you want to be long volatility. It's a tough market to sell premiums because, like a 10% move on Tesla, it's kind of a 3 standard deviation away. You don't want to get caught on the wrong side. So in this type of market, like I've talked about the VIX diagram, anytime, volatility is above 25, this is the kind of area where you want to be, despite, premiums being expensive, you want to be long premium, because if you guess the direction wrong, it can be really, really costly.
Excellent. So if there is no other question, guys, I mean, for all of you 100 people, leave us comments and feedback, because we really want to know, should we continue that and how we can improve this. And looking forward to your feedbacks.
Andrew, what are we thinking about right now of the schedule for the viewers? How many days we want to do this?
We want to do 3 days. If Santiago is happy with that, he's our producer sitting over there and he's just looking at us. Yeah, you have to come way closer. So we were thinking of Tuesday, Wednesday, and Thursday.
Yeah.
So we go live before the market close and we talk about this fun stuff that we're going through. And your support is definitely important. And your questions and comments also very, very important.
Yeah. I think Tuesday, Wednesday, Thursday is going to be a great addition. Let us know. And by the way, Friday, we're thinking about going on a Twitter Spaces. So if you follow us on Twitter, I think it's going to be really interesting, because we're going to have all the mods. We're going to have guests over, so it will be very fun. And then Twitter allows you to kind of select people and allow them to ask questions. It's going to be very interactive. It's going to be fun. Very exciting.
Awesome. Excellent. Thank you so much, guys. And I think it's time to go get some thing to eat. Probably we deserve a drink today.
Yeah, definitely. Yeah.
Okay, goodbye, guys.
Awesome. See ya.